Last month alone, just 4 mutual funds together attracted over 6,500 crore in fresh investor money. That's a strong signal of where investor confidence is heading. But what are these fund managers doing with all that new money? Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss the basics of investing and personal finance. In today's video, we are going to look at how the most loved funds, that is the funds that saw the highest inflows among all diversified equity funds in the month of June, have changed their portfolios. Which stocks did they buy more, which ones did they exit, what levels of cash are they holding, and more. The funds we are going to look at are on your screen. Parag Parikh Flexi Cap, investors' favorite Flexi Cap fund and India's largest actively managed equity fund with over 1.1 lakh crore assets under management. HDFC Flexi Cap Fund, second largest in the Flexi Cap category with AUM of around 79,000 crores. Motilal Oswal Midcap Fund, with over 33,000 crore in AUM, it's now the fourth largest midcap fund in the country. And Bandhan Small Cap Fund, a rising star in the small cap category with 12,982 crore assets under management. Now on your screen is how these funds have grown in the last 5 years. Alright, now let's start with the smallest fund out of the 4 and save the most popular one for the last. But before that, an important update. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% per annum and there is no fixed EMI. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app, and there is more. For the next 3 months, any withdrawal you do, you'll get a special rate of 9.99% per annum. So go for it now. Until 2022, Bandhan Small Cap Fund was a lesser known scheme, but since 2023, it has been among the top 3 performers in its category. That strong track record attracted 808 crores in inflows in June alone. Coming to how the fund is investing, now going by the June data, we can see the fund has turned cautious. Its cash levels have more than doubled from 7.8% in January to 16.4% in June, its highest ever. That signals a more defensive stance or a wait for better opportunities. Now, even with this defensive positioning, the fund stayed active. It added 5 new stocks and completely exited 2 names. Apart from new entries and exits, the fund also made adjustments in existing holdings by increasing stake in 54 stocks and reducing exposure in 42. The biggest spike was seen in Inox Wind, but that was due to the merger of Inox Wind with Inox Wind Energy, both of which the fund held. Next, let's move to Motilal Oswal Midcap Fund. Motilal Oswal Midcap isn't just another midcap fund. It's the top performer in the category, delivering 33% returns over 3 years and 37.4% over 5. That makes every portfolio change worth tracking. After holding back for months, the fund finally started deploying its cash in June. Cash levels dropped sharply from 31.2% in May to 17.2% in June. The fund added 2 new stocks, Keynes Technology and Aditya Birla Capital. Now take a look at the stocks where the fund increased its stake the most. One stock stood out was Trent. Its allocation jumped from 3.97% to 9.39%, making it one of the fund's top 3 holdings. Interestingly, Nippon India Large Cap Fund has exited Trent entirely during the same month. This clearly highlights that a stock from which one fund manager has high hopes may not be as crucial for the other fund managers. The fund also exited 7 stocks, mostly large caps, including Indian Hotels, Jindal Steel, Mazagon Dock and Zomato, which it had only recently re-entered. It offloaded shares of 3 companies, including Paytm, Balakrishna Industries and KPIT Technologies. Next, let's move to HDFC Flexi Cap Fund. In the last 18 months, HDFC Flexi Cap has added 28,000 crore in assets, taking its total AUM to over 79,000 crores. Look at the table on your screen. In June, the fund added two new stocks, Hindalco Industries and Sundaram Fasteners, and exited four holdings. Three of these, Tech Mahindra, ITC, Prestige Estates, had been in the portfolio for over 2 years. Now, beyond the entries and exits, the fund made tweaks across the board. It bought more of 17 existing names, including Bank of Baroda and Nykaa, and reduced exposure in 5 others. Now, as we looked into the data, ironically, while HDFC Flexi Cap trimmed its exposure in Bharti Airtel, another major fund, PP Fast Flexi Cap, doubled its holdings. Next, let's look at the most awaited and the giant fund, Parag Parikh Flexi Cap. A few interesting moves from one of the most closely watched funds. In June, Parag Parikh Flexi Cap made a fresh entry into Zydus Wellness via a block deal, a clear consumer-facing bet away from its usual PSU or tech-heavy names. On the exit front, it did not completely exit any stock. It also doubled down on Bharti Airtel, taking its allocation from 2.1% in May to 3.8% in June. That's a big jump, especially considering the stock was added only a month ago. As we saw earlier, interestingly, while PPFAS upped its bet, HDFC Flexi Cap trimmed its position in Bharti Airtel. Now, beyond Airtel, it increased stakes in 11 other companies and cut exposure in 2 companies. Meanwhile, the fund's cash levels dipped slightly from 21.2% in May to 19% in June. Coming to the fund's market cap allocation. The portfolio allocation of the fund is on your screen. The fund is currently large cap biased with 64% allocation. And with this, we have come to the end of this video. Hope this gives you some idea about how and where the popular equity funds invest your money. If you liked the video, please like and share this video with others who would be interested in this information. And we'll see you soon with another insightful video.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.